Thank you, traders, for hopping in here today. Yeah, another bearish day, good lessons, but I want to talk about yesterday's video too briefly here, because yesterday I was at the lowest place I've ever been as far as trading goes, and then later in the day, seeing all you guys comment, yeah, that was so encouraging. And I'm so encouraged because those who are aspiring to be good traders and those who are already like profitable, already very consistent, all come together and offer words of advice, encouragement, uplift each other. That's so encouraging to me. And I really appreciate that, guys. That's really what I wanted to create here: a community that is willing to help each other, back each other up, help push each other to becoming that profitable trader that we are all on a journey to achieve. Yesterday reassured me, the reason I'm doing this. I'm committed to being a successful day trader. I'm committed, to helping you guys out along your journey as well. Yesterday, I suspected that video was going to get a lot of hits, and it did. I wish I could blow my account up more often so we could all come together like that, but I'm kidding. But right now, I'm watching the SPY on one of my charts. There's a couple stocks that on a normal type of a day would have been, a long. That would have been CGEN. This one's on a nice little ascending triangle pattern right here. You see the bounce, 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 bounce. I'm not playing the bounce, guys. I'm absolutely not playing the bounce. Just nervous with the market conditions. Yesterday was like the third lowest day for the Dow, I believe, and then CGEN. This one is bouncing kind of nice. I'm not playing. I can't get myself to trade along. Yeah, I'm sorry. Watch. We'll see this one crack before our eyes. This is how you got to know. You just have to understand market conditions. So, yep, we're getting the crack. Exactly like we saw yesterday, guys. If this one had shorts available with CMAG, I definitely would have shorted it, but I'm glad you guys were able to see that. We just got to know market conditions. That's a good type of pattern in a long bias market, but when we have a day like yesterday, the plays that are long biased are going to be more short biased, and so it's going to crack around certain support areas. We definitely can look to buy this on the wash. If it gets down to like maybe 350, I will definitely long it. Because 350 is an area that shorts are going to cover, so we're going to inevitably get a bounce right there. We're going to have shorts covering, and then also we're going to have some long bias traders start picking it up. We'll look to get this at 350 if it comes all the way down there, and I think it could. It could set itself up right here for a bear flag. So 370, it's already cracked 375, so that's bearish. Let's look to pick this up around 350. Here we go. We're going to crack a little bit more. I'm just looking to long this when shorts are covering, because they have to cover. This thing's got to get back up. I do think they're going to cover around 350. I definitely think that's going to be a target area for them. So I will look to pick this up around 350. But dip buys, yeah, they're going to be really difficult in this short type of market. There will be some potential to make some money off of this bounce, but I'm not looking for this to break out up to $4 again. It'll be like 350 to 375 ish or so. Not only that, but if we pull up the daily chart on this, look at all the support here at 360, even the 50-day, and then the 13 EMA 200-day at 350. 350 is going to be solid support, guys. Solid support. We're calling this bear flag absolutely perfect, guys. This is where bulls get trapped a lot of times. They see a stock like this that has cracked support. It's bearish on the day. It's red on the day. And they see the stock, make a low here and start curling its way back on up, and then they end up buying around 380, 385, 86 up at the VWAP. That's awful, guys. Never buy a stock like this. It's forming a bear flag. If you guys don't know what a bear flag is, go look that up. It's just the opposite of a bull flag. These are some of the most common type of patterns to trade. Like, there we go. We're going to try to crack this area right here. It looks like we're going to crack, go down to 350. Might get in a little bit earlier because 360 is the 50-day. We'll see how low this can get here. I'm going to get in right here at 364. We definitely could see 350. If it breaks below 350, that's when I'm getting out. There's that pop up to 375. Alright, well, it happened. This is a more difficult way to trade though, guys, because we learn certain patterns from books and then watching videos, and those patterns don't always work. So you just have to be aware of how the market is, because what you learn from the books, from videos, from certain teachers or traders doesn't apply necessarily to every day. That's just one variable. There's so many different variables to trade in the market, and the most important one really is, how are the market conditions today? that's what you got to wake up and say to yourself every day, because market conditions today are very bearish. More people are focused on the indices versus these little penny stocks. This is what I'm used to trading, and because the indices are dropping, the inverse ETFs are actually moving on up. These would be good stocks to be looking at for a long, UVXY and TVIX. CGEN, it's not going to get any crazy type of bounce at all, but the lesson learned here I think is really important for you guys. So if there is a lot of volume in the penny stock world and on a stock such as this, what you want to do is, if the market is really bearish and a lot of shorts come in around here, you want to figure out, okay, where are shorts going to cover? Obviously, guys, I'm not trading today with any sort of size. I'm just trading to get confidence back. That's the only reason I'm going to make a trade today. It's just to get confidence back. This is a good lesson, though, today. Figuring out where shorts are going to cover and buying where they're covering, for that little pop back on up. Now, today it's not going to work very well just because there's no longs coming in. We only have shorts covering. That's like the only reason CGN was popping right here at all, probably because shorts were covering. There's no long bias traders coming into this. Just shorts covering. Now, if the market was more long biased and we had a crack like this at the start, but we know that longs are still coming into it, we look for areas of support like we did here with 350 half dollar. Then we had the 50-day 13 EMA, 200-day moving average, and solid support around these areas, guys. So really easy money. You look to buy right there because that's where shorts are going to cover and that's where longs are going to buy. You're going to get an easy pop. And today that was a good lesson on CGN, but at the same time there's just no volume on the long side coming into that play. Okay, guys, and my final trade today to get my confidence back was on TVIX. 2 out of 2 green on the day. Now, this is practically shorting the market when you're trading TVIX. It's an inverse ETF, electronically traded fund. And what this does is it does the opposite of what the overall market, those indices, are doing. So I had SPY on one of my monitors. I was watching that very closely, and I started having a doji star around 279-ish. So that's when I bought this TVIX around 38.15, right in this area here. You have this lower shadow right in here. It's really interesting that what you learn in the penny stock world, as far as some of these like lower shadows indicate, reversal or a doji star. These things really carry their way over into the higher price stocks, the stocks with huger market caps. This is the ETF though. So I was practically shorting the market. The SPY was dropping yesterday, really heavy. I think the Dow, it was like the third lowest day it's ever had, and I was long in a stock, like all out, going all out, and wasn't even paying attention to the overall market. Usually, the overall market and the penny stocks, it doesn't matter a whole lot. I've seen some days the overall market's red, it's not too red, it's just indecisive, and the penny stock market's really hot. That's where all the volume is. But on a day when the market is really red, just like it was yesterday, I think probably does affect the penny stock world because more volume is on the overall markets, and then more shorts come in to the penny stock world, and there's less volume there, more shorts. It's just you got to pay attention to the overall market. I wasn't yesterday. That's a lesson learned. Today, I've had the SPY on this monitor, watching it very closely. This is going to be my last trade of the morning, guys. Going to take a quick little profit here. Go about my day. Need to regain my confidence. The small gains are going to add up over time. Need to just keep, trading small, making the little bit of money here and there. Not going for the home runs like I did yesterday, which was the worst day to go for a home run. It was a really pretty pattern, the inverse head and shoulders. I unloaded on it, and it was the wrong day to unload. That's going to end it for me today, guys. Not making a ton of money, but I still think there was some lessons there to learn today. I hope you learned something. If you haven't yet, go ahead and hit that subscribe button. We'll see you tomorrow.